What if I told you one war could shake the entire global economy overnight? Right now, U.S. Treasury yields are reacting sharply, oil prices are surging, and suddenly the Federal Reserve's plans for rate cuts are in serious doubt. This isn't just market noise, this could directly impact your money, your future, and the global economy. So here's what's happening. The U.S. 10-year Treasury yield, one of the most important indicators in global finance, has been extremely volatile as markets react to the Iran conflict. At one point, yields surged close to 4.5%, reflecting fears of rising inflation and heavy government spending linked to the war. But then suddenly, yields started falling again. Why? Because investors are now worried about something even bigger, a potential economic slowdown. And here's where things get complicated. Oil prices have surged past $100 per barrel. That's pushing inflation higher globally. And at the same time, U.S. job market data is starting to weaken. So now the Federal Reserve is facing a serious dilemma. Cut rates and risk making inflation worse. Hold rates and risk slowing the economy further. This is what economists call a policy trap, and it's one of the hardest situations for any central bank to manage. Let's break it down simply. When Treasury yields rise, borrowing becomes more expensive, mortgages go up, loans get pricier, and businesses slow down. But when yields fall, it usually signals fear, investors moving their money into safer assets because they expect trouble ahead. And right now, we're seeing both signals at the same time. That's what makes the situation so dangerous, because it points toward a possible scenario known as stagflation, where inflation stays high, but economic growth slows down. And historically, that's one of the toughest economic problems to fix. Now let's talk about the Federal Reserve. Fed Chair Jerome Powell has already indicated that they're not in a rush to change interest rates, even with rising energy prices. Why? Because this inflation isn't driven by strong demand. It's coming from supply shocks, especially oil, and central banks have very limited tools to control that. So for now, the Fed is doing one thing: waiting, watching, and hoping the situation stabilizes. So here's the big picture: war, oil shock, inflation, economic risk, and the Fed stuck in the middle. This is no longer just a geopolitical story. This is a global financial turning point. If you want clear, powerful breakdowns of global markets and real-world money impact, make sure you hit subscribe and turn on notifications, because the next few weeks could change everything.